Good morning, techies and scientists. Good morning, techies and scientists. We are live now. I'm just doing a quick sound check, making sure that I can hear myself and I can hear that the sound is working. All right, so we are back. So I took a couple trade this morning. As you can see, I took a quick short from here. And then my target was literally below this, and I will post that. I think I recorded it briefly, and I was expecting it to go below this low, and it got so close, and it returned against me. So there's that. All right. So we see the market is quite animated this morning. I was anticipating that. Um, I'll probably briefly explain why I was expecting some animation this morning. One of my mentors told me something about inside day. For example, if you have a day on the daily chart, if you have a big candle where the high and the low is inside of the high and the low of another candle, that the next few candles, meaning price will either shoot straight up or shoot straight down, right? So I was anticipating price to either shoot up or it was going to go down. As you can see during the Asian session last night, I took an entry long here and I just let it ride overnight. So let me zoom in a little bit more. So I took a long trade here. I entered here long and it literally target me here, and then the next one was target over there. So I had a 50 point spread here. So it was a very good trade. And from then on, I was expecting it was going to keep going higher and higher and higher because of what I mentioned earlier, the inside day. So what do I mean by inside day? So if you break down, and I'm gonna go over the whole setup. Whenever you sit on the chart in the morning, I'm gonna go over how you do the setup, like a very systematic way. So this is yesterday's morning session, So when you take the morning session start around 7 a.m. all the way until I would say 11:50. So what I did is I took the lowest low and then the highest high. Why I didn't take that high? Now you may wonder, okay, if I use the Fibonacci, why didn't I use this highest high? This highest high fall into the launch session. So let me make sure I can zoom in so you guys can see what I'm talking about because this is crucial. Your Fibonacci placement is very important and or where you put it. And sometimes people they read books about it and then they don't know exactly where to place the Fibonacci's. So this is very important. So the low here for the morning session was at 10:34 yesterday. The high was like right around noon. You can say kind of slip into the lunch session, but yeah, kind of give it some grace. So the highest high was at 25,341. So to me, that is the AM session range, meaning from 7 a.m. all until 11:50 a.m. This is the entire range. And now, as the day go by during the afternoon, it besides the lunch session, which we'll probably skip it out because normally on a normal day, what you will see from literally 11:30 a.m. or noon all the way until 1:30, this is the lunch session. Um, because when back in the 80s or probably even before that, when you have the analysts, they'll work on Wall Street. Once 11 a.m. comes around, they go to lunch. They go across the street from the Wall Street station and they'll have lunch with their buddies and then they'll come back at 1:30 a.m. Okay. So that's why they call it a lunch session. And the PM session start at 1:30. So right on that time. But within that lunch session, within that PM session, there was no highs made yet. So the highest high was made on the PM session at 3:55, and the low was made at right about after the market close. So to me, this is the PM session. Now, once I see this setup like this, I immediately know at some point whether it's going to be during a London session or during the New York session. I know at some point price is going to go really high up or it's going to go really lower. And what do we see now? Bingo, like this. So I was anticipating since market is bullish, it was going to go higher and higher. And then when I put the trade on last night, I was expecting price to go much higher than these levels here. Apparently, that didn't happen. They changed course and they want to drop price lower. To me, I think price will probably continue to go lower for the rest of the day. We potentially may get a reversal during London session, but we'll wait and see. Okay. So it is good sometimes. Okay, yeah, you want to see me take some action and take the trade, but you have to set the whole you have to set it up before you actually take some trades. So let's do this. Mm, So to me, when I sit in front of the chart, oh, chart looks busy. All right, so let's change this one to NQ futures. So to try to see if we can get a cleaner chart here. All right. So when I sit in front of the chart, the first thing I do is the daily. I take a look at the daily to see what's going on, to identify any gaps, identify any wicks, whether on this side on that side. And then the next thing that I do is I highlight the green candle above it and the red candles below it. So as you can see right now, there are no green candles above where we are right now. This is where we are. This is where we are right now. So all the green candles or at, or I don't want the same vicinity as these green candles. However, we do have some down close candle, red candles below. So we have this one, and let's see. So and right about this one right there. So you find the one closest to it, you identify it, you put it like this, and you identify the next lowest closed candle, and you put it right at the open. So that's the next one. And then you identify the last one right here. So usually I'll pick the lowest one or the one with the longest candle. I put it right on top here. So there is potential 3 targets, right, on the daily. And as you can see, it is fast approaching those targets very, very, very quickly. So on the daily, this is what I do. And then the next thing I do is I identify any potential gaps. So the gaps is the low of that candle and then the high of that candle. So as you can see, this one right here. See? And again, guys, this is the daily we're talking about. Now, anything beyond that, what I do beyond that, I usually use a Fibonacci, and I'm just gonna use an existing one. I'm just gonna drag it over, and then I just grade that gap that I see here. So the gap is important. The wicks are also gaps. They are very important. And then also you have those down close candle. They are also your target. And then try to see what's going on. Usually what you would see is as price is dropping lower, it'll come in the middle. Let me zoom in a little bit more here. It will come in the middle of this gap here and then take a pause or bounce back up. And then it will get in the 75% and then go even lower. And then probably get here, take a slight pause, and then keep going lower and lower on the daily. Okay? This is what usually you will see. And there are so many things you can put on this chart. So you can get yourself tripped up and get yourself confused. Please try not to. Which is why you always got to denote what those levels mean. Let's see here. Call that one daily target. Because what would happen is when you drop into the lower time frame and you figure out, okay, what is that? Or what does that level mean? So you're gonna lose track of what that level means. So usually what I do, so today, that day, that lowest candle you see here, it's October 3rd, and that is the open. So what I usually do, come here into daily target, and then I'll put 10:03. When I drop in the lower time frame, you will see what I'm talking about. Like if you don't have the targets there, you're gonna be confused. You're gonna see a bunch of lines. You're not gonna know what it means unless you double click on it and then find out what it is. You're gonna be really confused. So what's that there? That's target. That would be 923. And last but not least, this one is 1014. Target. So for today, this is what we are going to use as target. So there are many, many, many other things you can track here. You can track this wick to see, okay, how many hand you can grade this wick. because this is the longest one. You can grade this week, but I would not bother to grade this one because we already passed below it. So the next one I would grade is probably this week. There's this entire range you can grade as well, right? So we can use, let's use the Fibonacci here to see where we are compared to the entire range because we're still inside that big range. Remember that Friday, I believe yeah, Friday the 10th, we had like a big drop. So we're still inside that range, guys. Still inside of it. So this is where we are right now. We're still in the premium. So if you ask me, okay, right now, which way should I trade? I will say go short. That's the best way to do. You short. You can short from here all the way, I say, respectively, until 24,772. But like I mentioned, you have to look at, okay, did it reach this target? Yes. Did it reach that target already at 25,101? Yes, it did. Passed it. See what I mentioned earlier? You was gonna get into that 50% and take a pause. There you go, right here. It's taking the pause. And that gap right here, let's see, 10, 16. That you see the middle of that gap, that 50%, that 50% here is also the 50% of this week right there. Yeah. Isn't that funny how that works? So the 50% of this entire gap from this week's low to this week's high, that gap we identified here, that 50% is also near that 50% of this week. So everything is fractal. Everything is working. It's like when you look at a seashell, and then you see there's a spiral. There's a spiral inside of a spiral inside of a spiral. If you look at the spider web, there's a smaller circle and then a bigger circle. It's just the same way here. So there's like always like a everything's interlaid on top of each other. Everything is layered when it comes to trading. So you can't be one dimension looking at patterns. If you're just looking at pattern for pattern's sake, you're not gonna get very far. So you have to do all this homework here. And we're not even done yet. So this is just on the daily to see what it looks like. So let me remove this one. So we've established that we can temporarily try to be bearish. So that's our bias. We are bearish temporarily until we reach either the 50% of a gap or of a wick, or we reach London session, the end of London session, which is at 11:30 Eastern. This is where you potentially can see a reversal. Okay, so let's take that out and let's drop to 1 hour. So this is a daily setup for me. So the next thing that I do, I took a look at the 60 minutes. Again, there's a lot of other stuff I look into, but those one are part of the primary one. So the next thing that I do is I look for midnight open. So where's midnight open? Midnight open is here. This one, and then you kind of like extend this one out. We're short. What do you know? It went up past the midnight session and then went lower. Mm. And then the other part I'll look into is probably the midnight low side. The entire midnight candle is something to watch for. You need to look at the low, the high, and the open. Okay, for the midnight. And then the next one I look into is the 6 a.m. So I look if I'm bearish and the price is lower than the 6 a.m. candle, I will draw a line here and wait for a short. See how complicated this can get? But it's not complicated. You just gotta go through the exercise a lot of time because when I first started trading myself, when I started doing this, and I was looking at my mentor, one of my mentors is ICT, and then he was going through all this process of setting up trades and everything. And I'm like, man, this is so complicated. But over time, I made so many mistakes. I made so many errors and I was chasing price and I was getting mad. And then over time, you see like whatever you think is complicated, it's saving you. It's helping you saving time. It saves you from being frustrated. It saves you from losing your account or blowing your account. So all this will work. You can do all of this by waking up early in the morning, do all the setup right before the market open. So the next candle I look into is the 7 a.m. one. So as you can see, the 7 a.m. low and the midnight section is like right around the same vicinity. Okay. All right. And the next big one that I look into is what is the gap between when price closed yesterday and when it opened at 9:30 a.m. So for that, if you use NinjaTrader, you look into your data series. Where's the okay? And you switch it from electronic trading hours to regular trading hours. Okay. And it's gonna take a sweet time to get there. Okay, so this is the regular trading hours. Let's try to see. Yeah, let's drop it to 5 minutes. That probably would be more helpful. In here, I don't know why the regular trading hours is showing at maybe 1 minute. That will help. It looks different here on this platform. Regular trading hours is at 4:14, but this one is showing a little bit much later. But I'm still going to use 4:14. I'm not going to use 5 p.m. So let's identify that gap where it opens. So you grab your rectangular. So you look at 1614. This is where it closed, and then you drag it over until let's say where's 9 a.m. What is 9 a.m.? 9 a.m. There you go. Right about here. So to me, this is the gap, and then I will probably stretch it all the way until let's just say 10 a.m. You know what? Let's extend it until 10:30. That's fine. So electronically, price closed at 4:14 at 239, 25, 239, and then at 9:31 a.m. price opened here and then drop. So that particular gap, you ignore all these candles here. I think on Schwab, Thinkorswim, you don't see any of this candle. What you see is just a big gap. So you ignore all these candles here after 4:14 p.m. You can use it, but I would say let's just for this sake, you ignore it. So this is the gap that you use, and as you can see, when it opened, it quickly closed it, and then we trade into it again, and then trade lower. So all these technicals in your trade will help you figure out okay what price is going, what price is trying to do. Okay, so I will switch back to electronic hours. And again, you click on data series and you switch it from regular trading hours to electronic trading hours. And that's it. There's nothing mysterious about it. All right, so now that we have all this information, right, and we see what's going on, we'll now try to see what is going on. So it dropped into the daily, it dropped into the daily 50%, and it looks like it will trace up. Let's see what it's trying to do next. Now, what I would like to see price to retrace slightly a little bit lower and then I will more than likely put a buy signal here for it to go lower, but apparently it did not do that. My ideal trade would be this. If you can retrace and get into this gap right here, and I put a buy limit order here, and then it retrace up, that'll be my ideal trade right there. Let's see if we can promise that. And then this is your plan. This is what you need to trade. This is how you need to trade. This is how you need to set up. If it doesn't give you what you want and need, you stay away. You don't chase price. You don't chase how to get into it. You just, even if it's going up and up and up, let it go without you. My plan is I'm waiting for price to drop here at a discount. Why did I pick this gap here? Remember, we have a big gap. This is the daily gap. This whole blue section here, this entire section that I highlighted in light blue, this is the daily gap. And it got into the 50%, and now it's going back up. Didn't I mention that earlier when I said well, it will get into the 50% and bounce back up? Let me put it into the daily, see where we at. It's almost as if I know what it's about to do. Yep. So if you will watch this live stream, I said it will get into the 50% and then it will bounce back up. Lord behold, it got into the 50% and bounced back up. Now it bounced a little too much for my taste. I will say that. I was expecting it. If it was going to be bearish, I was going to expect it to bounce into that 75% and maybe quite here at the 25 161, and then it'll sharply go lower. Maybe it's about to do that, but we'll wait and see. But I think if this is a retracement higher to go lower, that's a little bit too much of a retracement. So meaning there's a possibility that it may still trying to clear these highs. To me, I would feel a lot more comfortable if price kept going up at 9:30, you just keep going up, clear these highs, and then just go lower. That would have been my ideal trade. Clear these highs over here, go low. But right now, it's a little bit all over the place now. I mean, it could go lower, it could go higher. It's at a premium compared to this whole shebang here. So trade carefully. Let me drop back into a 1 minute. So guys, click the like button, so more people can come here, so they can, learn some of this good knowledge here. All right. So when I post clips of me getting into a particular trade, it's usually I just wait for the right moment. Yeah, I don't jump in. That's why you see very minimal retracement. It's for setups like this. If it doesn't give it to me, I ignore it. I move on. I mean, if I wasn't live trading right now, I would have just click out of this and then just wait for another session, because I trade based on time. So let's see, 10:45 and 11:15 right here. So this is what I was talking about. So between that time frame, 10:50 and 11:10, ideally, I was expecting price to just drop in here and then go higher. but this is not what I got, did I? Now there's a potential area for entry right here, but even then it did not retrace that over there. So what do you do when you actually miss a trade? Let it go. Because what can happen is this is what can happen if you trade. If you start chasing it, this is what potentially can happen. So let's see. Right now we are right at the premium right now. This in this territory, you more than likely it's probably best for you to go short rather than going long. It can go higher, but it's a gamble. I mean, you literally it could retrace severely against you, and then it goes um, way beyond what you can handle, stop you out, and then it keep going back up. So that's why it's not ideal to go long here. I mean, once you miss this, you might as well just let it go. The next best thing you can do, if you feel like you really cannot wait and you really feel like, oh, okay, you know what, I feel like I'm missing out on anything. If you feel like you have FOMO, fear of missing out, it's trading is probably not for you. You're probably gonna get hurt. But if it really is scratching your itch and then you really feel like you wanna be part of it, what you can do is instead of NQ, which is $20 per point, you can downgrade into MNQ, which is $2 per point, and then you can put in one contract. So you're not gonna lose as much if it retrace against you. Okay. And then, but if it goes up, you'll be able to participate. But I would not advise doing that as well. So I'm gonna do the same thing here. And again, what I say for when price is at the 50%, you usually get this kind of price action. It goes sideways, it bounces up and down, it keeps retracing lower than you want, and then, like it's very iffy. Okay, so that's why when it gets into that level, you just gotta let it go, wait for another opportunity to show up. All right, so let me go back to NQ. So yeah, so the difference between NQ and MNQ is just a smaller lot size. So NQ is $20 per point, which is I believe is $5. I think so. Yep, $5 per tick. And MNQ is I believe is 50 cents per tick. Could be wrong. Okay, let's drop back to MNQ. I'll go set up right here. Let me take a quick break. I'll be right back. So let's just watch the price action show up to see if we can get a trade here. Okay. Now imagine if you were chasing price. You say, okay, all right, let me get in right here and try to go long. How would you feel right now? The up and down, the back and forth, the wait. It'll frustrate you, doesn't it? See, I'm not frustrated. I'm good. I'm sitting here, I'm waiting. If it doesn't happen, it doesn't happen. The number one thing for you as a trader is to preserve your capital, preserve your mental capital. Okay? That's number one. Now you can try to take a quick short here, but again, what makes you think it may not try to quickly retrace lower to go higher? It's too close. The best area to go long is between that 25% and that 50%. But ideally in that lower area right there. The lower the better. But if you were to go long, the best area is at that particular area right there, sweet spot. So having the confirmation of this breaker here and the gap, and it's at a discount below the 50% is the ideal trade to take. Now let's talk about why this gap. Why do I pick that location? So which we can see there's a low here, went high, and then break lower, create a high, and then attempt to go higher, then break lower one more time into that 50%. That gap before this low is very significant. There's a high probability it will return into this gap to go higher. Any gap before a high or a low is broken, you always need to highlight it. You always need to take a look at it to see how significant it is. Okay. What I put, what I potentially see here is that it's using this candle as a proportion block. So I'm trying to see if I can get on top of that proportion block. Try to see if it can propel me a little bit higher. But I mean, it price is so hesitant right now. So you got to know when things are is slowing down and when it's hesitating. I mean, this is all points of frustrations, right? When you're a new trader trying to figure out, okay, what's the best area to get in, how to get in. And as you can see, price was just going really nice and smooth and then slowed down a little bit and then went really fast. And then now it's just slowing down and becoming a little bit sluggish. You gotta see the pace and the movement of the market and try to see if it's in your favor to enter. So I mean, I think right now this is the ideal area for me to go long, but I would much prefer to get in here. But it seems like because of that proportion block, it's not letting price to go lower. But I'll wait and see. What you may potentially see happen is it's gonna attempt to go higher and higher and higher, and then it'll just break, and then go to my buy stop, and then quickly get into my stop loss. That happens, and there's not much you can do about it. Which is why you have to keep your risk really low because they can jerk things around the way you don't want to. So we'll wait and see what we get here. Let's see if this proportion block will hold. Now, the thing is, sometimes when you get a loss, doesn't mean it's all lost. So when you get a reading like this, and then you go past your proportion block, that means price is gonna go a lot lower. So what you can do, you wait for price to go trade slightly higher, and then you can reverse. And maybe it's going to just hit my stop. Okay, let me reverse now. Because if it's a proportion block, I don't expect it to close below the half of that proportion block. If it does close below the half, that means it's going much lower. But again, look at how it's playing around. It's taking its time. It's back and forth. Let me put my stop right here so it doesn't stop me prematurely. All right, come on. What are you trying to do? See what I'm talking about? It's just generate like it's hesitating, slowing down, and this is the part where things can get really frustrated. Like if you don't have a nerve of steel to just stand still and pick one side, if you're on all side of the lane, this is where you can get wrecked. And then this is where you have to come up with a plan and say, okay, if it goes below if it goes below this candle, then I know it's going to go lower, and then stick with the plan until it stop you out. But sometimes you think you may see a trade that may be in your favor, it ended up not being in your favor. Okay, so far right now, I made all the gains, like all the loss that happened here. I already just made it by that just one trade right there, and right now it's all extra butter. I think I may close it prematurely because that area I feel like it may go back up. So I'm gonna move my stop right here, like I usually do. Yeah, if it's bullish, it's gonna stay within that gap here and try not to go. It will not try to go any lower. But for now, it seems like it's just gonna keep going lower, baby. Keep going lower. And what I'm going to do, hey, thank you. And that small little loss here, I made all of it back plus some more. So even though if you have a plan, like I had a plan, okay, I see that these two candles here, the close and open above that candle. So let me highlight it so you can see what I'm talking about. So that upper half is what I saw. Okay. I saw an opportunity. So I say, okay, this is the middle of this candle, which is a propulsion block. What makes it a propulsion block? You have a low, high, lower, low, a bullish breaker, dip into it temporarily, and then go up, and then it dip back into it here in the middle half of it, close right above the half, open above the half, and went higher. But it fails to go a lot higher than that. So I'm thinking, okay, maybe it needs some more momentum, and then I'm gonna try to go long here. Apparently, I think that did not work. I should have stayed with the premise that on the daily it's bearish, and then I quickly reverse. What I wanted to do is to get a quick scalp that is gonna go higher, and then from here I can reverse and then go lower, but did not give me this opportunity. So that's why I quickly reversed here. And on that one, from when I reversed on that one trade right there, I made back my small loss from here to here, and the target hit here, and I made all the gain plus commission and extra. So let's go back into the daily, see how we're looking, see how many target we have reached so far. I don't think that was that one. Let's see. See, that's why it's so important to take a look at the daily. So we met that target, get into the 50% of that daily gap here, bounce back up all the way up, and then now we're coming back down again. And this one is the next target, and then the next target is that one right there. It seems like yeah, it's going to be a bearish day today, at least temporarily. So we are at 11:25 a.m., which is coming close to the London close. We'll wait and see. What I may end up seeing is a very quick drop into 24,996, or I hope it's not gonna be to 24,912. That would be very sudden and fast. But we'll make a quick drop into 24,996, and then it may start going back up. Or if we don't see that, it may end up going lower and lower. And I'm anticipating those could be a target if it keeps going lower. We're talking about 24,753 could be a target if it keeps going lower. The next one would be 24,541, and if it keeps going lower than that, then yeah, you can make a record today. I mean, we're talking about a similar drop that happened on Friday, the 10th of October. I don't think we're gonna see that today, but you never know. Maybe a slow grind to go lower. So this is how we are in the daily. It's still bouncing into that area. Yeah, it's very undecisive on what it's trying to do. Yeah, let me make this a little bit bold so we can see. Yeah, the daily is your game plan. See, I try to go long against the daily buyers, and then you say I have to quickly reverse. Yeah, the daily doesn't lie. All right, so let me drop down. See how all these notes that I take, all this graph, it looks messy. And one day I'll clean up. And then this is part of taking good notes. Make sure you journal the journey. Um, if you think you're just gonna get like a MACD or a reverse SSI, if you think that's going to save you, I mean it can help. I'm not saying it may not help, but if you trying to just use those, yeah, it's not going to work. I've used those indicators; they barely work. Um, I mean, you only see the result like way after, but it doesn't help when you're in the thick of thing. Like, I mean, if you're using an indicator, how is that going to help you? Like when I got into that section right here, and I said, all right, I'm gonna go long. What indicator could I have used that would have helped me figure out, oh, okay, I think I'm on the wrong side of the street. Let me reverse. There was no indicators. My only indicator was it was this candle here, and it's like a stepping stone, right? That candle used that entire block here to go higher. Once I see that stepping stone and that block failed, I had to reverse. So that's my logic behind it. You know what I mean? And it's outside of the window of 1050 to 1115. So I wasn't even supposed to trade within that time frame, to be honest. But I wanted to get a quick scalp. Talking about indicators, let's take a look at let's take a look at this one. um, this is not my end all be all indicator, but man, this is very helpful. Let's see if I can zoom in a little bit closer to see if it's that going to help. Uh, this side is for the dollar index historically and how it's behaving. So this is the average over 20 years, and this is currently how it is right now. So there's a strong divergence between how the dollar used to behave over 20 years compared to today. And you can feel it in your groceries, you can feel it in the things you buy. I mean, that dollar is dropping. I'm not saying it's dropping like a rock, but it is dropping. It's not looking good. So, with that being said, we're gonna slide it to the side. Oh, come on. There you go. Work with me. Work with me. All right. So, let me maybe zoom out a little bit more. Uh, all right, so this is one of my favorite indicator. To me, it's like a roadmap. Try to figure out, okay, where we came from, what we're trying to do, and where we are. This is where we are right now. This is the average. Like on average, this is how the Nasdaq behave over the last 20 years. Okay, how do I know that? So let's take a look at this time frame. See, 20 years on the daily. Because of this platform limitation, even if you put it past 20 years, it's still gonna look the same. So it doesn't matter. I think it only goes up maybe to 15, 20 years. You can change it to 5 years if you like. Let me see, but it's not going to be too useful. Let's use 10 years to see how different it looks. See, not that much different. Okay. So let's stick with 10 then. So over the past 10 years, what you usually see, there's a dip in the middle of October. Price go up and like right around September, dip out a little bit. And after the summer, the lowest low usually happen like right on early mid October and then start rising back up. Lord behold, on October 10th, price dropped really aggressively. That's why I was not surprised because this is the behavior you used to get. I was thinking that it will probably take a little, like it will be a couple days to drop to that level. I thought it will probably on the 12 or on the 13, maybe it will drop to this level. But in one day, it just did all of that, clean everybody out. So that's why I'm saying there's a high possibility that it's really tracing lower into the discount to go higher. What do you see around that time? Around October 20th. It's retracing, just like it's predicting to do. It may go up a little bit from October 22nd, maybe today up until the end of the week, until next week, it might go up and then it might go slightly a little bit lower. But you may be surprised that next week on the calendar event, we may end up having some news. I believe we have a couple news announcement coming next week. There's gonna be like quite a bit of earning coming up next week. I'm trying to look it up so I don't give you guys the false information here. So what? So the question is, we're now looking at this roadmap for next week. What will be the catalyst that will bring that potentially either going to bring price so much lower to this level here on the discount, or that's gonna shoot it up much higher? What would be the events that creates that? You may ask. I'm gonna find you the first one. That's what happens when you're using multiple screens. And I did cover that in the weekly review, and I published that on Sunday. So, man, technology sometimes. So, On the 29th, we have Meta, Google, Microsoft. They are making the news announcement. And then you have on Thursday, the 30th, you have Apple and Amazon. They are making the quarterly earning announcement. To me, like right around 4 p.m., this will be the announcement that can make the market go buck wild, up and down. So I would be careful with that. Also, we do have FOMC. I believe FOMC is on Wednesday, but let me double check on that. Give me a moment here, guys. Man, it's kind of hard to find when you have so many screens open. It's kind of hard to find things. All right, let me see if I can share my screen back. Can you see it now? Yes. Okay. All right. What is that? So this is for this week. Was it this week? This is for this week. So we have a CPI that was supposed to come on Friday, but obviously it will be delayed. Let's do Forex Factory and investing back. So to me, these are the best indicators that you can use. Knowing what's going on, using the seasonal tendencies, knowing exactly where things will end up lining up over the next few weeks or so, will help you how to figure out how to frame your trade. So let me see if I can just filter this by just US, clear. This is like a tutorial on how to use the economy calendar, which is it's just not it's not a waste of time. So it's a good use. Let's see here. The reason why I'm using this is because this economic calendar you cannot move into next week. So that's why I'm just using this one. Hopefully we can find what we need. So yeah, we do have FOMC. And then there's a Fed rate decision coming up. That's Wednesday on the 29th. So there's on that Wednesday, man, there's a lot going on. And then if you really know what you're doing, yeah, you can make a killing. Okay. So it's not financial advice, but just letting you know. Okay. All right, so got that. Got that going on, and we have CPI will probably be delayed. So we have FOMC coming up on Wednesday, so that may create a lot of volatility. Um, so that's where we are right now. So there's a possibility that it may go a lot lower, like anticipated here, and I would say right at around November, at the beginning of November, heading into the mid-November, you can start seeing things start going way up and way up like that. Okay, Christmas rally, what you call it, or holiday rally. All right, let's go back to the chart. So we have London close here. Let's see what's going on. So with that chart looking like this, We have a London close reversal. What is the potential for price to go higher? See, when it does things like this, you just gotta get in quickly. And as you can see, I missed it. Ah, yikes. But don't chase it. Just wait because we're still outside of that 11:45. So I'm gonna wait for it to retrace a little bit lower. Let's see. Come on, give it to me. Play nice, play nice. Yeah, it's not playing nice. Yeah, you gotta resist the urge of chasing it because it's always gonna do this and retrace on you. You gotta practice to do that because the urge is okay. Now it's going up. You feel like you don't want to miss out, but it's always gonna do this. Now there are times it just keep going higher and then you really missed out. So, but it's okay. It's always gonna be another bus to jump in. Okay. All right. So I think we'll reach about an hour and 11 minutes. So I'll probably close it within the next 4 minutes or so. Let me see. What else I wanted to go over today? Yep. I think that's all I got for today. So what did we go over today? We went over how we do a setup. We went over a daily setup. We went over a session setup. So always make sure to highlight all your sessions. So you have your AM sessions, your PM sessions. You can do the Asian and London one. I mean, if you're really overzealous. But again, if it doesn't bring you anything that you think you feel like you need to take action, you don't have to do it. So in the inside range session, what I anticipated is that price will either go surge higher or surge lower. As you can see, it surged a lot lower with a lot of energy here and all around here. Okay, so it seems like it's going to do a quick retracement. I think it's probably going to retrace all the way up until 25 118. What's that? 25 118 at? Yep, right around here. Wait, see that? Imagine if you chase price and now it's drawing down on you like this. Come on, man, it's not fun. It is not fun. Oh man, actually, that was a trade right there for me to get in. What do you know? Is it gonna give me another chance to get there? No. I may get lucky. Now you may wonder, okay, if I said is this low, I mean this high to this low, why am I taking it over there? I mean, take a look. What is that? That's nothing. Okay. So to me, to the body, let's go. Okay. So I'm gonna highlight for you. Usually the time I usually engage price, which is right here. If it's going higher, this is what I'm anticipating that it will do. Go lower here into that gap and then go higher. Now, remember earlier I mentioned that I was anticipating price to drop into here and then go higher. Let's just cut right through it, right? Sometimes your plan can go wrong, and there's nothing wrong with that. So you just gotta make adjustments along the way. Okay, so I think that's my mistake here. So it gave me, let me see, one, two, three opportunities to get on the train, and I literally missed it. And there are times it's gonna be your own fault as a trader, right? That you miss the bus. Listen, you were procrastinating, you woke up too late, you overslept, and then you miss your bus to go to work. That's what happened right here. I missed my bus to go to work. Those days happen. But guess what? I don't feel anything about it. There's gonna be another opportunity. Every hour there's an opportunity for me to make a trade. Okay. So with that being said, I think we'll cover good stuff today. We will talk about the daily setup, the range setup. We'll talk about indicators, how indicators is not going to help you, and then we'll also talk about the leading indicator like the economic calendar and what may potentially come next week. If you have any questions, leave some comments. Please like, subscribe, and leave your notification bell on. You never know. So sometimes during the week, I may just pop in. I may come on Saturday, kind of spill some of that extra knowledge. Stay tuned and, happy trading.